Yep. Hello, welcome to the YouTube channel called Listed with Elyse. I am going to talk to you a little bit about mortgages today. I am not a mortgage specialist, so I have a friend here with me. My name is Elyse Bouwmeester. I'm a real estate agent in the Waterloo Region with Red and White Realty. And this is Louis.
Hey guys, Louis here, Empire Mortgage Group based out of Hamilton. And yeah, good to see you guys again. Good to see you, Elyse.
Nice to see you too.
Yeah.
So I want to talk about something that I have a lot of interest in, and I know that a lot of other agents have a lot of interest in, and just people in general. Housing prices have skyrocketed. Anyone that bought their house, pre-COVID, I guess, or even in the last 10 years, you could be sitting on quite a bit of equity in your house. So I want to talk about pulling equity out of your home to purchase another house. And I want Louis to kind of explain maybe the process, what that would do to your mortgage payments. Just talk a little bit about maybe if you've done it before and what that looked like for these people. So, is it worth it? So talk to me, Louis. What do you think?
So there's a lot of angles that you can approach this. Obviously, a lot of people I meet on a daily basis, especially now with what's happened with the market in the last 18 months, everyone's asking me, Louis, like, it's crazy how much my house is worth. Like, I bought my house in September of 2018 for 700 grand, and now they're sitting for $1 million, right? And, we obviously don't want to buy a bigger house, but at the same time, we think there's opportunities there. Like, what can we do with this money?
Yes.
Right. So clients that are buying houses 3 years ago, maybe their mortgage is probably like $300,000-$400,000. But now their house is worth $1 million. So now we're sitting on, $600,000 of equity there. And,
Yes.
Banks, for anyone that doesn't know, banks can lend up to potentially up to 80% of the value of the house. So if we do rough calculations on $1 million, that's $800,000 of potential equity that you're sitting on. That obviously you have to qualify based on your income. But if your income can support it, you can take up to 80% of that, right? And use that for maybe refinancing some debt. So a lot of people do this time of year, especially a lot of people are doing refinancing their places to consolidate a lot of credit card debt, unsecured lines of credits, and to get in and pay lower interest rates, because interest rates, as we know, are at the lowest they've ever been, right? But then another angle to that is clients are able to take out some equity and potentially use that as down payment to purchase investment opportunities, right? So whether that be pre-constructions or just existing condos or houses that they potentially want to rent out and be able to earn some rental income, right? So like I said, there's a lot of angles to how this works. I mean, maybe I'll go over the process of how it works. So a lot of times what you do is you'll contact me first, and we'll do an assessment on your finances. So we'll take a look at your income and see, based on that income, how much equity you'd be able to take out and be able to support, right? Because that additional equity will essentially be increasing your mortgage payment. So you still have to be able to pay for that down payment, right?
Yes.
Now, let's take that example that I just shot at you. So that client that bought their house for $700,000 is now sitting on a potentially $1 million home based on current market value. Their mortgage, let's say 300,000.
Okay.
So now they're sitting on potentially 700 grand of equity.
Yeah.
Right? And let's say they can qualify for the full 80%. So $800,000 minus their existing mortgage, you can potentially take out 500 grand if your income can support it. Okay. And to be able to purchase a rental, you typically, if it's a rental that you're not planning to live in, so this is where it gets a little bit tricky. And this is where, Elyse, you always say it, there's information out there all the time. There's so much information out there, but we always would recommend to sit down with somebody to be able to navigate that information, because it can be very misleading. The biggest one that I get from a lot of clients is, Louis, I heard I can get a rental property with 5% down. And you will see this information online all the time. If you can look it up on the insurers' websites like CMHC, Genworth, Sagen will have all this, and it's not very clear. So a lot of people ask me, Louis, apparently all I need is 5% down and I can buy a rental property.
Yeah.
Technically it's true, but it only applies to owner occupied rentals.
Ooh.
Okay, so I'm talking about multi-unit houses at this point. So maybe there's a separate, maybe like an in-law suite with a legal separate entrance. So that's considered maybe another unit. So if you live on the top floor, you can technically buy a rental for 5% down, but you have to be living in one of those units.
Interesting. So if you're buying something just for a rental for someone else, for a family to live in, and you plan, in 40 years, you're going to make your money on this house, how much do you need for that down payment? So
we always say 20%.
You'll need at least 20 for that. Okay, good to know.
So we need 20% down. Okay, there may be the odd exception here and there. Some lenders may take less, but general rule of thumb, from what we're seeing, 20% for non-owner occupied rentals is required. Right. So I'll pick your brain on this. Let's say, for example, I'm reaching out to you for rentals. Like, what's a good purchase price for a rental, let's say, in your area?
Right now, like if someone were to buy like a townhouse condominium.
Sure. Let's say like that.
Let's say you could get an apartment style condo in Cambridge for $400. You could get a townhouse condominium for $500. We'll just do some even numbers there.
So let's say $500,000, right? So 20% of that is basically $100,000.
Okay.
Right. So technically speaking, we could be looking at potentially a few rental properties, right?
Because can you use all of your equity for that whole down payment, or do you need to have that cash in the bank?
No, so you can take all 500 and put it down on one, and technically you won't have a mortgage on that rental.
Mm-hmm.
You could do that and buy it out in cash if you really wanted to, but why would you? Because there's a lot of tax benefits to having rentals too, because a lot of the interest can be written off, right?
Yeah.
So you can write off a lot of the interest expenses as business expense, technically speaking, on your tax return. So you can claim that.
Cool.
So what I advise is a lot of times just put the minimum required to get it, right? So, I mean, this is a little bit excessive, but my client, the example that I'm using here is $500,000. So you could potentially, if all the numbers work out, this is obviously, very vague and would require some more details in the finances to get it to work, but potentially you could put down payments on 5 rental properties, right? Because you have.
That's amazing.
Right?
How amazing is that? I mean, these, like you said in the beginning, these are opportunities.
Yeah.
I mean, and if you can get approved to increase your mortgage and you can afford those payments, I mean, the payout when you're ready to retire is it's phenomenal. So I'm so interested. I just read a book written by a real estate agent in Cambridge, and he talks about this throughout the entire book. Mm-hmm. And I was hanging on every word because I was like, this is what me and my husband have always talked about doing. So I mean, and it's not just you take that rental income and you pay that mortgage down, and then in 20, 30 years, you have all of these homes that you own and that are just paid out, and then you have your cash flow coming in every month because you don't need to pay down the mortgage anymore. It's already paid off.
Exactly. Right.
Amazing. Yeah, amazing.
There's so many avenues here, right? So if you ask me personally, Louis, like what's your take on it? And it's not so much, a lot of times everyone's so focused on how much cash flow am I getting every month from the rental, right?
Yes.
You have to factor in, obviously, the mortgage payment, the property taxes, depending on whether they're paying for the utilities or not. You have to factor that in too, right? So a lot of times, a lot of people get discouraged when I do the math with them. They're like, Louis, I'm only getting $500-$600 a month, $700 after paying everything. Like, that doesn't seem like a lot of return on investment for how much money I'm putting into it, right? But the way I see it is, someone's paying for your mortgage, and and in, like as you said, 10, 15, 20 years, if the way that the real estate market continues, which it hasn't slowed down ever, you could, if you wanted to retire, you could cash out those equities if you wanted to sell a couple and retire on it and do something like that, then
or have something for your children, or it's like just
that, right? Like
house prices have gone up and they will continue to go up, and it's just, real estate is the best investment. I think asking a real estate agent, of course I'm going to say that, but it really is. So,
Yeah. And then,
wow.
yeah, but maybe the example I used was a little bit extreme, but even if you had, $100,000 that you could take out, that's one rental unit. You start there,
Yeah.
right?
Exactly. Start with something. And then,
Yeah.
once you are able to sit back and, understand that it's not going to be immediate gratification, it's not going to be an immediate payout,
Mhm.
but things that are good payouts and things that, are going to be really worth it, those things take time.
Mhm.
So nothing comes free and nothing comes without a little bit of hardship. So, but if you're willing to put in the time and, a little bit of money, and I think it's amazing. And I think that more people should be doing it. So,
And then I'll bring up another question, question, but a lot of, angle that a lot of clients will ask me is like, Liz, why don't I just use that 100 grand or whatever and invest it in stock market?
mm-hmm.
That seems like it seems a lot easier, right? A lot less.
Yeah.
And the stock market can get me, 7 to 10% return. So why would I get into real estate?
Yeah.
And what a lot of people, just don't realize is, okay, let's say you had 100 grand, not saying you're borrowing it, but let's say you had 100 grand sitting in your savings account. And you're saying, Louis, do I invest that in the stock market? Crypto is a big one now that everyone's talking about, or do I buy a rental property?
Yeah.
And it's like, well, you have to realize, sorry, my screen just popped out there, but you have to realize that let's say you make 10% return on your $100,000 that you're putting into investments, that's 10 grand. Okay.
Yeah.
But if you take that 100 grand, you leverage it with a mortgage, you get a $500,000 property, right? Someone's paying for that mortgage.
Exactly.
Now, your appreciation is not on the 100 grand that you use for down payment. It's on the 500 grand that you bought, right? So even let's say, I'm going to ask you this, what's a very conservative year-over-year growth that we anticipate for housing? What is it, like 3-4%?
Sure. Yeah.
3-4%. 3-4% of 500 grand, right? Is, let's say 4% of 500 grand, right? We're looking at 20 grand.
Yeah.
That's already,
and that's conservative. Yeah.
That's already more than that 10 grand that you would have made investing at 10%.
Exactly.
Right. So,
yeah. I mean, you talk to anybody that, bought a house in like 5 years ago or 10 years ago, 30 years ago, 40 years ago.
Yeah.
And they'll say, oh, I should have bought 5 of those. I got that for $60,000. And I mean, that will be us in 20, 30 years, right? I should have bought more. I should have bought more. I should have bought more. So,
yeah. So,
it's important.
Empire Mortgage Group, like we try to run, especially with COVID, it's a little bit harder, but, eventually we'll start running more workshops for, first-time investors that want to get into the market and don't know where to start.
Yeah.
Right. Because a lot of people are like, Louis, like, I could barely afford we barely were able to get approved 2 years ago. How are you expecting me to, get into the rental market, right? Or buy another property, right? But yeah, it's a lot, a lot of people don't realize it because they don't speak to a professional. And then when they speak to a professional, they realize it's.
My husband's coming downstairs right now.
It's like we can't, right?
Oh, hi, honey.
Oh, hi.
Guest speaker.
I'm talking.
Guest speaker.
Sorry, Louis.
Okay.
Anyway, sorry, what were you saying?
No, I was saying, like, a lot of people don't realize until they speak to a professional that they can actually do this, right? It seems like, and even for me too, when I first started, it's like, it just seems so out of reach. Like, how am I able to afford another property?
Yeah.
Right. But it's, this is the perfect time. This was like, if there's obviously, what happened in the last couple of years was not the greatest things that happened, but there's a lot of good that can come out of it. And one of those things is the increase in how crazy the real estate market is right now. You can take advantage of that now.
Exactly.
And take out that equity, right? So yeah, but feel free, if it's not me, talk to somebody, go to your bank and just brainstorm, right? And don't be discouraged if maybe you might not be able to get into the market now with a rental, but build a plan towards it. So at least figure out where you're at. This is where I also tell clients, not only for rentals, but like pre-approval clients. This is huge, right?
Yeah.
Clients that are not in the market, you know what, like Elyse, I'm not looking for another 12 months to buy a house.
Yeah.
But speak to somebody like a mortgage broker or your bank to see where you're at.
Exactly.
Right. Because if you're short in terms of, let's say maybe you know what, I was expecting to be able to approve for a $500,000 home, but as of right now, I'm only pre-approved for 4.
Yeah.
You still have 12 months to work on it.
Yeah.
And at least you know how, like, what you need to do to get to where you need to be in 12 months time.
Definitely.
Right. So that's something that
Yeah.
I always advise a lot of my clients to do, or even anyone out there that's watching this, is to, if you want to do something, just ask. Right.
Exactly. And get the information and get yourself set up. And I say the same thing to people. If you're planning in a year from now, then you should be talking to your mortgage specialist right now. So you need to make that call right now.
Right.
Anyways, thanks, Louis. That was awesome. Lots of great information, lots of helpful information, lots of things to think about. We will definitely be back with another video with some more hot topics. Again, my name is Elyse and this is Louis. And Louis is a mortgage agent and I am a real estate agent in the Waterloo region. Have a great day. Thanks for joining us.
See ya.